What's going on, everyone? I want to go over crude oil. So we're looking at ticker symbol CL. Again, today is not the most ideal price action whatsoever. So we are stuck in a range. If you look at this 5-minute time frame chart, we're going sideways. We're getting some up moves, but we're also getting very, very drastic pullbacks back to the bottom of the range. So first things first, how do you kind of navigate through this type of day? Because obviously to start the day, we did not know that we're going to be in a chop zone or in a ranging market today. So it's going to take a little bit of time, but as a trader, as you get familiar and as you get comfortable, you start to get a little bit more kind of experience under your belt to where you start to kind of identify these moves. Again, you get 30 minutes into the market, an hour into the market, maybe you took a couple of trades, maybe you got stopped out, you're not getting that follow through that you want to see. What can you kind of do to navigate the markets? One thing is you can either sit out, right, on a day like today, which is perfectly fine. You can that's also being able to grow as a trader. We need to know, when is it not our day, right? So definitely sitting out is definitely an option. The other option is to identify that, hey, this market is going sideways. I'm not really getting a lot of follow through, but there is some moves in a little bit of areas where I can make some money, right? So what you need to do is, for one, absolutely size down. So if you play, I'm just going to, whatever, right? I'll speak in just an example for everyone. Let's say, for example, you play 2 contracts on crude. Let's play 1. Let's say you play 5. Let's play 2. Let's say you play 10. Let's play 3. Right? Or 4. We need to size down. We need to minimize our risk because the probabilities of us winning are going down on a day like today. So what I want you guys to focus on here is the 5-minute time frame. And again, I know this looks very, very confusing, and let me make it simpler for everyone here, and just pull up the 20 SMA and the 200. So what I want to look at here is, if you see the 200-day moving average, it's rising, okay? However, our 20 period moving average is flat and almost going sideways, okay? So if you kind of look here off the open, let's get to the market open New York session here. We get this first initial push at 6:30 a.m. We're still trading below the 20 SMA. At 6:32, we're actually looking at the 2-minute time frame. Let's switch this to the 5-minute time frame. Again, 2-minute time frame can be a little tricky for newer traders here. So if you really look at the 5-minute time frame, this time frame is going very much so sideways. So if you look at the 605 candle, again, kind of puts in a high, does not confirm, no position there. However, if you look at the 620 candle, puts in a low back under the 20 period moving average, kind of confirms, and then you would get stopped out. But again, if we just kind of get into the market open here at 6:30 a.m., look at the big green candle that we have here. One thing that I do want to point out is we're still under the pre-market lows, right? So automatically what I'm going to start to do is I'm going to mark out these pre-market highs. I'm going to mark out these pre-market highs. I'm going to mark out these pre-market lows. And I'm going to kind of sit here and tell myself, until we get a setup that kind of confirms below these levels, we're stuck in a range. Maybe it's probably not the best time to trade, especially if you're in that pre-market kind of range, right? So if you still look at the current price action, we are still stuck in this range. So if anything, the only real setups that I want to take are going to be setups from the long side coming off the bottom of the range. So for example, let's just go back, right? For example, if I look at this short setup here at 7:10 a.m. Pacific Standard Time, it sets up no confirmation. However, if someone was thinking that this is going to break down and then you anticipate a breakdown, you got trapped. So what I would be looking for when you can visibly see that we're trading sideways in a range is I would look for the long setups coming off the bottom of the range and then try to play those back up to the top of the range. So this setup right here confirms at 7:25 a.m. Pacific Standard Time. The price was 81.42, and in 10 minutes goes to a price of 81.55. So this was a hell of a move here. Again, scalp that move on the way up. Again, as we get to the top of the range, if we get a setup from the top of the range going back down, we might want to consider taking those trades that are coming from the top of the range to the bottom of the range. Remember, we're not trying to take the long setups at the top of the range into a potential breakout, or the short setups at the bottom of the range for a potential breakdown when we're stuck in the range. So if you look at this price here, 7:45 a.m. sets up and we go from a price of 81.32 in 5 minutes, go down to 81.18. So again, another hell of a move there that you could have taken advantage on and got some points. Here's the next setup coming from the bottom of the range. Here it is setting up at 81.46 at a time of 8:10 Pacific Standard Time, and it goes all the way to a high of 81.72. So again, another hell of a move there. If we look at the last setup, back from the top of the range, coming back down to the bottom of the range, we would be looking at an entry of 81.34 all the way down to a price of 81.13. So again, those setups are going to work, and that's going to shift your probabilities from breaking even or losing to winning. So instead of when we're already like this, like I want everyone to go to their 5-minute chart. I want you to put the 20 SMA on your chart, and I want you to look at the time of 6:20 a.m. Pacific Standard Time. This setup here closes below the 20 period moving average. However, it's still above pre-market the pre-market lows. So we haven't broken out yet. So I don't want to take the short position into demand. I want to play the range coming back out. Now, again, if this candle would have broken through pre-market lows, then 100% I am in the short position. However, I have to ignore this because we haven't broken out of the initial pre-market range. I hope that makes sense. If you guys have any questions, join my Discord, ask them in there, or comment down below. I'll see you guys all in the next one.